Last year, me and Justin made 2022 predictions. Let's first go over that and then give our 2023 predictions. Some were correct, some were wrong.
The two big predictions I have are pretty high level, but the first one is going to, I think, deal around with the fact that trust in systems that people otherwise have no reason to doubt will fail.
So, Justin, do you think that has come to fruition?
I would give myself a B+ on that.
So what systems do you think are beginning to fail, or at least trust in those systems?
The way I would describe it with the benefit of hindsight looking into 2020 is that I think people are much more aware of, this is going to be an economic term, but I mean just to go beyond economics, the counterparty to whatever guarantee is made. I think you have, or be very careful when I say this, within my limited bubble of people that I know who I believe to be mainly plugged into different, let's say, social networks than I'm plugged into, and seeing different things, there seems to be more of this awareness that, wait a minute, I don't really trust anything. And in other words, there seems to be this questioning, even if it's not completely at the fully conscious level, it's starting to bubble up more and more to the conscious level of, listen, these people are presenting themselves as authentic, or at least I have assumed these people to be giving me authentic, truthful information, and it no longer is the case, or I no longer have reason to trust that implicitly. That's why I give myself B+ in terms of that.
All right, next one.
And I think that will then lead people to demand whatever they can get their hands on that will restore trust and restore confidence. So in the big picture, those are my two predictions for 2020: restore trust and restore confidence.
That we need to dig deeper into those. So riskless assets that people believe they are. So people going, whether they're built for view is just wrong. Like that is a tough pill to swallow too. Like I think you could be off a few years with the timing as things happen extremely. Go into some more. Yeah, I'll do some deep, realistic financial predictions. Justin, on that Tether in crypto note, I think the biggest loser. On that Tether in crypto note, I think the biggest loser this year will be the crypto space.
So my first prediction was kind of going over a crypto crash. So 1 year ago, we were at about 45,000. Now we have seen a semi-crash. So I think that was actually a pretty good call. But I go on in this video to say that if you go back and study any period of a financial bubble, looking at 2008 with the housing, 1999 with tech stocks, 1989 with Japan equities, if you look at 1929, if you look at any of these dates, Bitcoin was in the exact same hyper bubble. And in the video, we said that all equities were in the exact same bubble. So it would just make sense if that started to unwind. Now, I would give myself credit, but I then go into what stocks I think would perform the best.
Well, no. Be fair. So like in this particular aspect, I would give myself, F to an A or whatever, right?
Yeah, I mean, that's pretty, I mean, that was a pretty good call back then. That's when we were pretty much at the peak mania.
Yeah.
So then I followed on by saying, so I thought the biggest loser was going to be in the crypto space. The biggest in the metals, I said gold and silver. So 1 year ago, we are pretty much at the exact same level that we were a year ago. Silver, the exact same level that we were a year ago. And then I said the other biggest winner I thought was going to be in the shipping stocks. Now, we actually did see a massive run in the shipping stocks, and I sold them. Since then, we have absolutely tanked across the board in shipping, mainly because of an economic slowdown as well as high energy prices. And that's just a bad combination for shipping stocks. High energy prices bring their costs up, as well as demand was coming down. But during this time, I had sold all my shipping stocks already. So I traded it properly, but I did not have a long enough, or my time horizon was too short for that prediction. So maybe like a B+. But those were kind of our predictions that we were going over last year. So Justin, what are some 2023 predictions that you have right now?
Yeah, I've got a few, but before we go on to that, I also want to talk about some things that we got wrong too. So I had assumed that in 2022, would be one of the years where you would see Tether default. Or when I was talking about confidence in systems, that was part of stuff going in my mind, probably behind the scenes, was confidence in Tether.
Oh yeah, I think we talked about Tether. But to be fair, Tether did not blow up, but we did see Alameda and FTX, which was a similar thing, but not quite Tether.
Yeah, so I would say when I look forward to 2023, so I don't say this is a prediction for 2023. I rather just say this as more so like a generalized comment in general. And so I'm going to be vague and high level. And so that's why I don't hold this out there as prediction, but this is what colors a lot of what colors my thinking is that I think the existing system will stay on far longer than everyone assumes that it can stay on. And I think when it finally does implode or crash, it'll crash far quicker than anyone thinks it's possible. So when I look forward to 2023, I'll first start off from real estate because that's really kind of what my main bag is. I think that where real estate will go for a large part will depend upon where the Fed goes, particularly in terms of rates. What propped up real estate prices, at least from my perspective in the past, was the ability to borrow cheaply. As I'm fond of saying, if you can borrow cheaply, but maybe overpay for the asset, no, that's not the worst thing in the world. But overpaying for the asset and borrowing with expensive money, that's not going to be a good combination. But I will give myself a bit of a hedge in that if real estate does start to deflate, and I think that is very much in the cards, I do think it's important to note that there's different tranches of real estate out there. So for example, you might see less institutional and less, let's say, investment money coming in from family offices or whatever, sophisticated investors for, let's say, multifamily and commercial, but you still might see a strong showing from single family residential. Or let me say this a slightly different way. If you're going to see asset prices deflate across real estate, I suspect some sectors will deflate far quicker than other sectors. And my suspicion is, at least looking forward to 2023, that the real estate that will deflate the least is going to be that which is at the lower end of the spectrum. So think single family, 3-bedroom, 2-bathroom homes, kind of like the starter homes. I'm not saying that there won't be deflation there. My guess is that if we do see continued deflation in the sector, we'll see less deflation there than we will in, let's say, the bigger assets, particularly the sexy assets, going up to the large Class A commercial and residential.
Yeah, that makes a lot of sense. And even if the Fed does cut rates, I still see real estate taking a hit just because, unless we see a lot of new stimulus and that government spending is bringing new currency to the market. Other than that, I see real estate taking a hit no matter what. There was one more prediction that there was two predictions that I made in that video that I forgot to talk about, but they weren't stocks. They were much more social concepts. And one of them was food shortages. During that time, I was living in Arizona and there was a lot of shelves empty when I would go to the grocery store. Thankfully, I actually see much less of that today. I'm currently residing in the greater Boston area, but the food shelves are actually pretty full, and that is a prediction that I'm thankful that I got wrong, because I thought we'd be in a much worse situation with regards to food. So I mean, that is something that I'm very hopeful for, that while the prices have gone up, don't get me wrong, but we still have food, and that there's a big difference between not having food and having high food prices. And they're actually so I'm pretty optimistic about that. What do I think with 2023? I have no clue with regards to that aspect. The other thing that I talked about was a increasing of social unrest, and I would say that is spot on, because I mean, if you look at organized crime, it's just shot up, especially with just retail organized crime and just crime in general, not just crime, murder, and a lot of just abuse. It just seems to have a lot of tension in the US right now, especially in where I'm residing right now. It just, people seem to be angry and they don't really know what at yet. So I think that is going to continue for 2023 and beyond. That is for sure.
Yeah. I think one of the other things too I would make for 2023, and this is one of those predictions that I think that we missed. And to be fair, I think many other people did miss it too. But in 2022, I was surprised that metals held up as well as they held up, because the Fed raised the cricket. Josh, help me out here. I can't remember the statistics, so it's just a half memory, which is dangerous. But in terms of the velocity of hikes, this was pretty damn quick in 2022, right?
It was the fastest ever.
It was the fastest ever. Okay, gotcha. So you had that
as a percent term, because we started at such a low.
Oh, okay, gotcha. Yeah, that might be what's going on. But what I find interesting from that is also, I would say, how well metals weathered the storm. And in a strange way, the almost, I don't know if I would call that a positive correlation. No, I won't say that. What I'll say it is this. We started to see gold and the dollar, we started to see gold in the Dixie. I don't want to say they moved in tandem, but the traditional highly inverse correlation that we did see between them, it seems to have weakened substantially.
I would disagree with that. I mean, look what happened with the metals. They started to go up the second the dollar bottomed, or the second the dollar topped, and we've been in an upward trajectory since then.
Right. But my point is, if you go back and look at historically, look at the last time the Fed raised interest rates and look at, let's say, the percent value of drop in metals in that particular situation. Was the percent drop in metals greater than it was this time around? And I would say if it was less this time around than it was last time around, the extent of the negative correlation is weakening. That would be the point I'm going for. I don't know where that's going to go in the future, but I do note that if you're a follower of Brent Johnson's dollar milkshake theory, there's a line of thought that says there will come a time when both the dollar and gold will rise at the same time, which is very Well, that in itself is very unusual. You would expect them to be inversely correlated. So,
all right, so on to 2023 predictions for me. I think it's much tougher this year. Last year, I thought it was pretty easy to say that the market was most likely going to come down, especially in crypto and other assets like that. But we've already seen it deflate in most of those. But I would not be surprised if for 2023 we chop around for a while, because there's one thing that I really don't like right now. Every single person that you know thinks that we're going into a recession. Every single thing that I see online for every single mainstream media and person has it typed in that we're going to have a recession. And when you were trying to trade the markets, you have to consider, has this already been priced in? And a recession has already been priced into the markets. So what, maybe we see a severe depression, but I don't know, because when I go out to the stores, I still see there's people everywhere. There's still people going out to dinner, and in fact, I would say people still have a lot more money than they did before, because the layoffs that we've seen, they've been in some sectors, kind of like what Justin was saying with real estate, where you see some sectors pop. San Francisco tech. I mean, there's probably a lot more deflation there than there is in your rural areas, just because most people got a pay raise in 2020, 2021. They still have their job, and prices have actually come down a little for the stuff that you have to buy. Therefore, people feel like they're actually richer in comparison, because if you get a pay raise and the prices of goods and services are actually coming down, which from experience, I think that they are, things seem to be cheaper than they were at least last year, just as you can see this by the CPI, but people still have more money. And yes, they might not be spending things on everything, but they still, I think, can make ends meet. And therefore, I have kind of changed my thesis, where I thought we were going to go into a super severe recession in 2022 and 2023. But I think that could be prolonged a bit. And I'm not sure, unless we see some sort of black swan event and there's a liquidity crisis, then all bets are off. But I would not be surprised if we just chop around for a bit in the market. So I do not feel any strong conviction towards making any call one way or another.
what you could do, Josh, is you might want to hedge yourself and say, listen, unless there's some unexpected outside catalyst, that would be a black swan, or if you want to maybe say it like this, unless you see something that people have assumed to be a constant be shown to be a variable. So that's kind of me saying what I was saying earlier, trust in a system that people had no doubt or had no reason to doubt the trust is suddenly shown to be doubtful. Then I would say this would be an event, and to use your early phrase, you basically are introducing something that has not been priced into the, or the people have not priced into the system, that is rapidly and quickly priced into the system. So again, like those are hard to call, because by the definition, you're not able to call them, but you can at least understand that such a thing might exist. So that's what I would say, to kind of like build off something you were saying, is that if we don't have anything unexpected, then you'll probably will see volatile chop. But if we do have something unexpected, and just remember, for the past, few years, it's been one unexpected thing after one expected thing. So
yeah, Justin, at the end of the video, you gave one more prediction about a certain stock. Not quite a prediction, but you said you were curious to see the outcomes of what would happen, and that was GameStop. What's your current assessment, and what do you think for 2023?
Here's the thing. So when you had the sneeze that happened in January and February of 2021, so from that point in time, the furthest out option contract that was in existence was the January 20th, 2023 contract. Said another way, when we filmed this today on New Year's Day of 2023, the only option contract that's currently in existence, that was also in existence all the way back in time, is the January 2023 contract. If you see, so I guess my point from all of this is that if there is going to be some sort of event or whatever, right? Or if people want to use this as a force multiplier to produce change or go after someone or whatever, right? This is probably the last option, no pun intended, that I'm aware of that retails currently. And in other words, like there's like a loaded gun in terms of the volatility energy, is that how I would say it, that's built up in this contract. For example, if you see another situation where you have a repeat of, let's say, January 2020, where suddenly the option chain gets blown up, where GAB goes up quick enough and it basically puts all the options in the money, including the 237.50s, then that would be an interesting event. And obviously those who are positioned for such would do pretty well. But my point is that if it doesn't pop off this time around, at least retail from the options perspective is going to be rather tapped out. Now, I'm not saying, people still won't stay in. I'm not saying people still won't buy, a few shares each week. And by all means, continue to go for it. But if you're going to see options and retail in options as leveraging the system against the system. As I'm fond of saying, you're getting the system to call bullshit on the system. This seems to be the last large loaded gun that I'm aware of to do that, both from a technical perspective, because of the I don't know the technical term, but because of the Josh, help me out here. The range of the option chain. Nothing goes higher than 237.50, and the reason it goes as high as 237.50 is because this touches back in time at January and February of 2 years ago now. So my point is that the door is closing for this. Not to say the door is closing on GME, but at least in terms of using the options contract that retail's in to leverage the price, this seems to be the last option, no pun intended, that this can happen in, or at least until there's another event and retail buys back in.
Yeah, so more socially speaking, I think civil unrest is going to continue, and I think it will maybe not exacerbate to an extreme degrees, but I think we'll probably see a continuation of World War III bumbling. I think I actually kind of did talk about war, that we would experience some sort of war, just because if you look at the fourth turning, in hindsight, that was a good call, but I don't remember if I did it on that video. I do think that we will continue to be in a wartime state. Now, if it exacerbates drastically, I think we could be in more of a pause time. But I would not be surprised if there starts to be some more progression towards that.
The way I would frame it is I read something online talking about we're in a quiet war. What's going on right now? It's like a war of a mind, a war of perception, which is still very much a war. And it was what was the name of it? Silent Weapons for Quiet Wars, I think was the name of the piece. And I think that was pretty on the nose. All
right, guys, what are your 2023 predictions? We didn't give as many as we did the last time, but that is because I think it's a much harder environment to make calls in right now. So thank you guys, and we'll see you next year.